Good morning, everybody. Welcome to Friday, October the 11th. It's just coming on 6 a.m., and we are an hour away from the start of earnings season. We've got JP Morgan, which we've discussed and covered during the course of the week, and Wells Fargo will be reporting at 7 o'clock. Then we have PPI, core PPI, and Fed's Galsby speaking at 9:45 after the open. And then the University of Michigan sentiment at 10 o'clock. After that, there is nothing. The day is over. You do have Fed Logan speaking at 10:45, but it's pretty much a nothing burger. So all of our data for today will be out by 10 a.m. And it's pretty wild, really, that yesterday was pretty copacetic, as I saw. I apologize for taking a personal day. That happens. But you did get a little bit of a red close. You had an absolutely abysmal range there at 30. Your 5,800, 57.95 call credit spread worked out for you for 67% or better. And it all came off of a CPI miss. Not only a CPI miss, but then you had jobless claims that rose to 258,000, which is the highest level in a year. And the market went up, filled the gap up there. Right up back there at 57.95, right below that 57.96.80, filling that 57.92 gap. Pretty wild. So again, with this being 1, 2, 3, 4, a fifth green week possible, closing above 57.37.80, I will make the same comment I made last week when we were there on Friday. Last week's candle was 57.26.52. We took it out early in the morning there on Friday. And then it just turned into fuckery. And as I commented, they are not going to give you a red week minus 1 point, minus 5 points. So 57.37 being the weekly candle, and we have had green weeks like here, June 28th. The green week was plus 0.90, less than 1 point for the entire week. They're not going to give you, here's an example, 1, 2, 3, 4, 5 green weeks in a row, 6 as we went into July 12th. Before we had that sell down there, OPEX week of July. So it is not impossible. It is not out of the ordinary. Here you go. Back here in May, down less than 1 point. I put my head out on the guillotine looking for this being a red week, closing below 57.37.80 for the week. And, well, these last 2 days of fuckery on Wednesday and Thursday, that has that seriously at risk. So if you are into that Friday expiration today, well, you know where to go. Like I pointed out here on the weekend email. Scrolling on down, looking at what we're looking at from a summary point of view and bringing it all down here into how the weekend looked. The aggressive risk for me, the 57.60, 57.55s for Friday, because we opened up lower on Monday, that shifted lower down to that 57.40, 57.35. If you are going to be forced or are going to be intrigued on rolling it, October is still and will always be 57, 57, 73. So best place for you to consider as far as rolling, if you are going to roll it on down there to October 31. Let it be and let it sit. So I'm going to stick with this because today is JP Morgan, and I'll get to everything in a second here. JP Morgan, like I've said, JP Morgan has been my bitch for years. This year has been more than sensational. We've traded and alerted it 4 times this year on the 32 trade program. On in January, we were already ahead of it with the February 16th JP Morgan 170 puts. They went 317%. Now, the 0 DTE January 12s, they were 700% within 40 minutes of the day. They wound up on the day 1,800%. So yeah, we are going to be trading JP Morgan today after the opening bell hits. And as I shared on Monday, December 20, JP Morgan 210 puts closed Friday at 650. And that is where all of the action was, is, and remains to be. And I will pull this up. Not that one, not that one, not that one. Come back here. Technical difficulties on a Friday. And here we go. And here's your JP Morgan. JP Morgan, December 20th. All the OI is still out here on 185. 190. 190, 190, 190. Right here at 212. Your 210 puts closed at 715. That's for December the 20th. Now, we'll get to that in a couple of minutes. But yeah, to answer the other question that's been over there in the newbie room about the spreads, well, I've kind of worked that out, and I'll get to that over the weekend when we can spend a little bit more detail. But essentially, you got 7,700% profitability this year, 3,800% if you're half as good. And I'll work all of that out and get you a full explanation out tomorrow so that you can really get an understanding as to how simple the spreads are. But that's what we got, so I'll leave you there. And don't want that, want this. Come on over here onto our charts real quick. SPX for the week, 56, 86, 85 down there on Monday. Gap up on Tuesday, sitting here 57.15 unfilled. Minus 1% is now 57.3883 for the moment. Bullish reversal on the 10-day and 5-day, which were inverse and bearish earlier in the week. Wednesday and Thursday fixed that. So now your 5-day moving average is up here at 57.50. It will be moving up here into the 57.60s. The 10-day moving average will make a fractional move, possibly up into around 57.45, both of which will be above the weekly candle being here at 57.37. A lot of fuckery. Over here on DIA, it's sensational move on Wednesday on DIA. Getting absolutely no kind of return as to the downside yet, or any pressure back on that 420.72 with that unbreakable 418 still down there below it. Everything has shoved into the QQQ, essentially NVIDIA. And the move for the week having touched and began overnight on Monday, Sunday night down here at Tuesday night down here at minus 480.40. Back right up to the top of the gap, the unfilled gap, the one and only gap that remains to the upside, right up here, right above 494, and teetering as we go into the open. And IWM, this is where the weakness is starting to show. Today is Friday. Fridays love to ramp to the upside on the IWM. Same thing as... Take you a quick look over here on SPY. No gaps to the upside. The VIX loves to get slammed down on a Friday. So caution in the wind. That algo plays a regular, typical kind of Friday. We should be looking at the VIX getting crushed down under this 2102 that it has been chilling and hanging out at for the better course of the week. Filling that gap from last week as we sold off on Friday down here, down to 1940, 1930. Again, bring you back to the IWM. IWM, here is your Friday. And here is your Friday. So again, IWM is just a traditional kind of look that it likes to rally on Fridays. So careful with that, because did see a nice big sell-off yesterday, come right on down, touch the 50-day moving average. So careful, careful, careful. So NVIDIA broke that 131 over here on Tuesday, and now it's supporting 131. Until you get NVIDIA down below 131, you're not going to get QQQ down below 487. So again, NVIDIA is in control of the entire market. However, typing in a ticker symbol, which is a rare thing for me to have to do. Tesla robo-taxi event last night. Bam. You are down 13 points and right down to the 50-day moving average, filling this gap from back here in September. Take you a wider view over here on Tesla. And as you can see, essentially double topped, having done everything I could to pound the table to talk about 258.94 being the top. 207 is your bottom. 207 is extremely supportive. 207 is your bottom. 207 is sitting right down here, down 20 points. And no, I would not chase it if you are not already into the short from back up here at 264, 258.94. So JP Morgan. They're going to be reporting earnings in a couple of minutes, and the video will probably be out shortly after they have reported earnings. And here is your 30-day view of JP Morgan and how it has just been trolling this 210 area. We'll zoom it out even to a 90-day, and you can see here where your 210 is, your 210. We have crushed JP Morgan multiple times. 200-day moving average sitting down here at 195, 193.70 being the big, massive pivot. We'll see, but that's what we're looking at with JP Morgan, having been in this 210 region for the better part of 3 months, going on 4. 193.97 breaks, you start to get that bank liquidity crisis that everybody is starting to whisper about. So again, over here on the SPX, reports are coming out, earnings are coming out. You want to be safe, you go play the 5805, 5800s blindly without having to think of anything, but you obviously have a bigger, broader view of things because it is the month of October, and the month of October ends on October 31, as well as your full moon is next week on October 17th. So you got a couple days, just a couple of days, and like I've shared here before, in the past 20 years, the second week of October, which is the week that we're in, has never closed green weekly candle during an election year. 20 years, 2004, 2008, 2012, 2016, 2020. I kind of joked about it in the beginning of the week saying, yeah, well, that means that this week's going to be green. Well, that's what we're working on. In the past 20 years, +5 green monthly candles has only happened 2 times. June 2006, January 2007, that was a streak, 8 months. November 2012, May 2013, 7 months. In the past 20 years, 5 or more green weeks have happened 31 times. I put an asterisk here at the October 2007 just to take a look at it. But again, we had it back in here in May, June, like you saw, January, November, December 2023. I think we had 9. So that's where it was. October 2007. The SPX made a new summer high on the same date as we did this year, July 16th. The Fed cut rates for the first time on the same date, September 18th. SPX made a new all-time high in October on the same date, October the 9th, 2 days ago. In 2007, the SPX peaked on October 11th. That day is today. So I wish you all a fantastic trading journey today. If you are going to be trading, JP Morgan, I will undoubtedly be dedicated and focused to as we get open today. And I wish you all the greatest of great weekends. I will be doing the one-on-one calls with a large number of you who have already pre-scheduled to have them done tomorrow and Sunday. Anything you need, any questions you have, never hesitate. Send me a private message or post it over in the newbie room so that many others could see, because they may be thinking about the same message, same question, and we can try and answer it for everybody. Enjoy yourselves, enjoy your weekend, enjoy everything about what's going on in your life, because the food here, it's just a hell of a lot better than what you've got over there.